Well, here we are at the end of October, 1st of November. First of all, congratulations to the LA Dodgers for winning the World Series. Congratulations to all the kids out trick-or-treating this past week. It was a lower turnout, so I think the candy to kid ratio is probably in the kids' favors this year. I know my grandkids were in that situation. And also, we're about 2 or 3 days away from a national presidential election. So let's just say congratulations to all the companies who were selling television ads and print ads. They were the winners. We'll find out if we are winners after this coming Tuesday. But in the meantime, let's get started with week 44 of Des Moines Market Values. This is Les Solgrove. Let's get started. So another thing happened this weekend as well. As we all know, it's the time for us to set the clocks back. So this was going to be my intro slide, Goodbye October, Hello November, but instead I've deemed it, titled it Hello Darkness, My Old Friend, because here in about, let's say I'm recording this about 12:15 in the afternoon, in about 4 hours, it's going to start to get dark. And it's going to remain that way until sometime in probably March. So hopefully you've got your batteries all charged up in your flashlights, and you've adjusted your nighttime vision. Hopefully here, because it's going to be a challenge showing houses. I always hated that. All right, well, let's get started here. Before we start the monthly report, we just have to talk about the elephant in the room, and that's mortgage interest rates that happened in the month of October. We saw mortgage rates effectively just rise every single week over week, this last month, and they've definitely had an effect on the real estate market. In fact, this is the highest rates have been since the 1st of August at 6.72%. I really would like to think that we're done seeing the interest rates rise, but I think we probably got maybe another week before they take a turn, and I'll kind of show you why I think that in a minute here. There's this old, I don't know, belief that the Federal Reserve, when the Federal Reserve reduces rates, that mortgage rates tend to follow. Well, this is proof positive that that didn't happen this time. I mean, you can see right over here on the right-hand side, this little blue arrow or blue line, that's our current mortgage rates trending week over week. This is the national 30-year fixed rate, by the way, from Freddie Mac. And you can see that, the Fed dropped the prime lending rate, the rate they charge banks, down to 5%. And here we are as consumers paying mortgage rates of upwards of over 6.5%, close to 7%. And that also directly affects the buying power. This past week, if we were using that same analogy, I tend to use $1,200 a month principal and interest payment on a 30-year fixed rate. The buying power is 309, 300, where when it was down here closer to that 6.08%, which was our, just almost 6% rate, the buying power was closer to $330,000. So yeah, it definitely affects the home buyer population out there when rates tend to go up. So I'm highlighting this little blip up here because we really shouldn't be surprised to see this. And here's why. If you look back a year ago, we all remember September, October, and early November, we saw a rise in mortgage rates that year as well before they kind of tailed off. But and I didn't really realize this or notice this either. But if you go all the way back to the previous year, 2022, we also saw that same rise. So, basically next year about this time, I'm going to say, okay, October's coming, gang. Remember, this is when interest rates tend to rise, at least historically. So, we shouldn't be surprised, but it always is a surprise when we see those rates go up. So what I did was I applied that mortgage interest rates. The black line here that you see, this black line is our 30-year fixed national fixed average interest rate week over week. And I laid that over the weekly listings taken weekly bar chart graphic. And I was trying to see if there's any correlation of when rates go up, if the number of homes coming on the market are affected. And clearly, we can see, at least in this last, in the third quarter here anyway, as mortgage interest rates started to drop down and we got to our low there in September, we started to see more homeowners come onto the market, and that was a welcomed result of that. I feel there's a spot here where maybe it didn't pick back up for 1 week or whatever, but overall you can see that we've had more homes come on the market when the mortgage interest rates, 30-year average fixed, was much lower. And then as interest rates began to rise, we've seen that number of homes tail off. So this is a pretty powerful graphic if you're working with home buyers out there or even home sellers, to talk to them about the effects of mortgage interest rates. Even though they're not directly affected by the Fed, they're certainly, when the rates go up and go down, we certainly see the market change in a pretty dramatic ways here. If we look at this same overlay, looking at the weekly pendings here, these are the number of homes that went under contract each week, not the total number of homes that were in sale pending and waiting to close. This is just the ones that pended each week. And you can kind of see that same trending here. As mortgage interest rates went down, we started to see a few more pendings here, especially in this third quarter. And then as the interest rates started to rise, they started to drop off. Week 43 last week was a little bit of a blip, and some of that, could be just due to the fact that maybe home buyers were making that one last hurrah, getting out there and getting under contract before the holidays with the idea of that. But we definitely saw a drop again of interest rates, or the rise of interest rates, saw a drop in the weekly pendings for this past week here. So um, this is the one that really kind of blew my mind, and I had to really look at it and analyze it, because this is that closed sale pace. This is that ahead of last year and behind last year. And so this line right here, where it says 0, this is the number of closed sales each week. And whether we're ahead of last year or when we go below that, we're trailing behind last year. And I thought, well, this doesn't make any sense. But then the more you look at it, it really does. If you kind of look here, as mortgage interest rates um, come down a little bit. Now remember, here's the thing about closed sales. This is a product of transactions that happened 30 to 60 days prior, and longer even than that for new construction. But this is overall all homes closed. And you can see that as the number of closed interest rates went down, um, this trailing number here where we started to get a little bit behind, is probably a product of the late second quarter activity. Um, and as we get closer down into that fourth quarter here and starting, we started to see interest rates come down. And then all these sales that happened here in the third quarter are helping this column chart that's upside down here, saying we're going to catch back up. And in fact, we're 155 homes away from being caught up overall, which is pretty close. But you can also see what's happening here in the month of October. We're seeing those mortgage interest rates rise. So if the typical thing's going to happen here is this is happening and this is rising and sales have slowed down for these previous weeks that are coming, we could definitely tend to see this number start to gradually go back away from catching up to last year. Even though rates might continue to, um, even if rates come down as we get past October and into this November month here, it's still going to be the effects of sales that happened in the September and October months. So I really am anticipating seeing us start to get behind again, and this little bar chart is going to start to trend. The red lines here, the red bars, start to trend back down again, at least as we get close to the end of the year, then maybe back up again. So don't be surprised, don't be shocked if we see that happen here. So again, this is just the sale pace again, where we are, and this is as of today. That 115 that we were behind was at the end of the actual month. So 117 behind just as of today, November 3rd. And, again, I think we're going to see that kind of, this catch up trend. It's probably going to continue, but not by much. In fact, I think we're going to see that dip back off there. So as far as number of homes, so now we're back officially into the end of the month here. We're looking at end of month closed sales. We closed 1,056 homes the month of October, at least that were recorded as of October 31st. We all know that sometimes sales get entered later, but this is a snapshot of October 31st. And you can see that we're not too far behind 2022 and 2023. We're really more on pace with 2022, that blue line there, because that's kind of right where we were 2 years ago. As far as the number of homes listed goes, I think we've probably peaked in our listing inventory. I keep saying every week, gosh, are we going to hit 4,000? I think we were going to hit it. I no longer believe we're going to hit 4,000 listings on the market. I just really don't think we're going to see that, because if you look at the general trend from the previous 3 years, you can see that the month of October is basically the highest, point in that fourth quarter, and we get into November and December, and our listing inventory, number of homes coming on the market tend to drop. Now, if sale pendings drop dramatically, then yes, we might end up rising closer to and maybe above that 4,000 count, but it's going to be awful hard, because you can see here, looking at the sale pendings, they're also off at this point. But again, it all depends on what's going to happen with those rates as we get into uh, post election day. We'll see. Let's just call it that. Let's see what happens if interest rates tend to drop rather dramatically. I think we'll maybe then start to see some additional activity. So, do I think we're going to hit 4,000 listings the end of the year, or by the end of the year? I really don't. It'll be a fantastic surprise if it happens, but I just don't think we're going to hit that anymore. Looking at the for sale and the sale pending categories now broken down by price point, this is the one thing you're going to notice here, is that that $300,000 to $400,000 price point is where the bulk of our inventory sits, closely followed by that $200,000 to $300,000 price point. This 300 to 400 is kind of our entry level new construction, with a little of that, especially in the condo townhomes, being under that 300,000. And that's kind of keeping us, our inventory levels up. Our sale pendings, however, the bulk of our number of homes that are in sale pending are in that $200,000 to $300,000 price point, which makes you a little bit nervous when you see you've got this much inventory, and this is the more active price point, but not too far off of 300,000 to 400,000. I'm always amazed when I look at the far end here. 115 homes over $1 million are on the market now. Granted, only 18 went under contract in the previous month, but that's kind of pretty typical for this time of year. We see the upper price points more active in the spring to early fall markets here. So where we really need some help is this under $100,000 price point. You can see only 113 homes currently on the market under 113, with only 44 of those going under contract, which tells me that these are probably some of the toughest houses out there right now as far as price and condition, and so that everybody's really kind of looking a little bit higher than that. As far as the months of inventory, this is kind of could be a little bit confusing graphic, so let me just kind of dissect it down here. The yellow means it's less than 4 months of inventory. In other words, we're into a seller's market. The blue bars in these price points is the balanced market, which is between 4 and 6 months of inventory, and then anything above 6 months of inventory is considered a buyer's market. And so while it looks like overall we're in a buyer's market, that's not true, because if you remember the previous graphics, the bulk of our inventory is sitting in this $200,000 to $400,000 price point. And this little dashed line right here that you see across here, that's our overall months of inventory is at 4.4. It is a balanced market overall, but again, as you get localized into these price points, you're going to see that we're still in a seller's market under 300,000. So the little dash lines, that just shows you where we were last year. So again, lots going on this particular graphic. I apologize for that, but I'm trying to pack in as much as I can so I don't have multiple slides for the same thing there. I like this graphic a lot. I created this one a couple of months ago. This is basically the linear spread between list price, price at pending, and the sale price. And you'll notice here that from about June on, well, let's say from July on, we've seen 3 months of our prices trending down of the median list prices. you know, and that's a pretty good jump or a pretty good drop from 359 coming down from 369. So it's a $10,000 drop from July. And this is fairly typical. We do typically see some of the higher priced homes coming off the market as we move towards the fall. But you know, at 359, that is the median list price. We'll come back here to the price at pendings in a second. The big number you want to really watch is the sale prices. So from June till today, in June, in the middle of the heat of the spring market, or yeah, the spring and summer markets, the median sale price was 308, and we're down to 285. And if you look at that, the spread between what the median list price is today, whoops, I just hit that button, from 359 to 285, that's a $74,000 spread. So when the media is out there reporting pricing, they tend to promote, you know, what the median list price is, you know, what home sellers are asking, $360,000. What they tend to not report is what the actual sale price is compared to that. So there's a $74,000 spread. It doesn't mean we're getting $74,000 off of these list prices. It just means that these are the price points where homes are being purchased. However, this yellow line here, that price at pending, staying pretty steady around that 315, 316, pretty much all year from about April on here, just means that you know, the homes that are going under contract are a little bit higher, and I think a lot of this spread is coming probably from new construction a little bit here. But to see where homes are actually going under contract, it's a little bit higher. But this is the number right here, this 285, and this red line is the one we really want to watch as we're moving into the years here. So back on market, you know, the old bomb rate, that was a popular show about 2 months ago when at one point I said we were at you know, 30 some 38, 39% on a weekly basis. Now you can see that the number of homes that actually fell apart in the month of October were 226, pretty much right in line with kind of what we've seen most of the year. There was a little higher bump here in June when the market activity was even higher. But the bomb rate per month, this is at the very end of October, was 23%, and that's pretty much pretty close to where we are across the board. Now you're going to look at this year-to-date bomb average and go, well, wait a minute, there's not a single bomb rate showing above 27%, or how can that be 27% for the year? Well, keep in mind, this is a snapshot at the end of the month. What it doesn't take into account is during the month, we've had these higher swings. So if you think about each one of these little months as being its own little, you know, cycle here, there are points in time throughout the middle of the month that have been much higher, and that's where we get that 27%. So if I took the average on a weekly basis, this is where that 27% comes from. So price increases and price decreases, this is another one of those graphics you really, really, really want to look hard at. And you know, if you look from January, the price reductions began, and you look all the way to the end of October, every single month, with the exception of 1 month, has seen a month-over-month increase. So this increased each month all the way up until October, or I'm sorry, until August. And perhaps it was the state fair that caused this. I'm giving maybe state fair a little bit more credit than maybe it deserves, but you know, everybody's on vacation, and you know, they basically just did not reduce pricing as at that same rate as we saw each month. So that was the outlier. Over in the overall from January to October, we have seen a weekly or a monthly increase in price reductions. Increase in price reductions, more reductions each month. The price increases have stayed pretty steady. We had a pretty good jump in you know, in April, which is the spring market where new construction pricing kind of came in. July, we'll see a little bit of a price increase from that same contingency of listings out there. And now as we get into October, we've seen some price increases kind of bump a little bit. And we'll see that as builders are adjusting their 2026 pricing for maybe it's the proposed construction that's out there that now needs to be adjusted based on material costs and things like that. So last two slides, and I'll get my big head out of the way here. Uh, these are the last two slides of the show this week. You've got the all homes by price point for the metro. So this is our metro stats, and you can kind of see that the bulk, if you just look at the white areas versus the grays, this just does give you an idea that the bulk of the inventory is in that $200,000 to $400,000 price point in the local market. Actually, up to 600. A couple hundred homes, 230 homes in the metro for sale between that $500,000 and $600,000 price point. But the bulk here at 894 is 300,000 to 400,000. And you look at the same numbers on a sale pending side. These are the number of homes that are currently under contract waiting to close. The bulk of those, again, the same, that $300,000 to $400,000 price point, which is pretty typical for our marketplace. Now, that I also track this for broken down by existing homes, existing condos, and then the new construction as well. We're not going to show you those on the show this week, but if you go to DesMoinesMarketValues.com and you go to the show graphics, you will see this week we have close to 50 graphics, 50 slides in this week's show. So just because you don't see it on the show this week, you'll see every single one of the graphics from this week's show, plus all that happened for the month, as well as all the metro stuff here. So, all right. So next week's show comes to you from Boston, Massachusetts. I will be out there for the NAR NXT conference. It's the annual conference for NAR, and with all the things happening in the real estate world, it's going to be quite an interesting conference, and I'll try to report some of that to you next week from the road. We're going to probably look at maybe some local numbers as well, but we'll kind of play it by ear. So we'll see you all again next week from Boston, Massachusetts. And as always, if you are enjoying the content that I provide you each week and you find it valuable, please hit that share button. Hit the subscribe button and help me get my subscriber counts up. That really helps get this show out to even more people. And I just want to thank you because you're helping me grow this channel every single week, and I do appreciate everybody's uh, conversation. So let me know if you have any questions or if you've got any specific graphics you don't see. I'd be happy to jump in and try to make something happen here. So we'll see you all again next week in Boston, Massachusetts. Be safe and be sure and get out there and vote this week. We'll talk to you all again next Sunday.